Assalamualaikum and good day, Dr. Roslan. I am Ling Ming and I will be starting off this presentation. The list shown are my team members. We have chosen topic 1, which is the features of capital market in Malaysia. There will be 3 parts of this presentation that will be covered by the 5 of us. First, the overview of the capital market in Malaysia. We first need to know what capital market is. Capital market are places where savings and investments are exchanged between the surplus and the deficit units. Both of these units can be individuals, firms, investors, and also government. In Malaysia, there are 4 capital market segments as shown below. Under the public market, there are equities, fixed income, and SRI Suku. For your information, SRI stands for Sustainable and Responsible Investment. The private market, on the other hand, are the private equity and venture capital. Equity, crowdfunding, and peer-to-peer are under digital market, while under the fund management, there are conventional, Islamic, and SRI. The Malaysia capital market is regulated and developed by a self-funded statutory body, which is the Securities Commission Malaysia, otherwise known as the SC. The SC has direct responsibility for making rules, enforcing regulations pertaining to the capital market, ensuring sustainable market growth and development, supervising capital market activities and market institutions. This includes exchanges, clearing houses, registered market operators, and regulating all entities and persons licensed under the Capital Market and Services Act of 2007. As of 2019, Malaysia has a total capital market size of 3.2 trillion ringgit, with international reserves of approximately 424 billion ringgit. And despite a slow growth in 2019, the economy actually managed to grow at 3.6% thanks to the growth in investment and the increase in private consumption. To sum it up, the financial development for Malaysia has been consistently developing. Domestically, Malaysia's overall financial sector development has improved drastically since 1993. On the international level, data has shown that Malaysia has achieved performance excellence and is actually ahead of emerging market peers. That's all for me. Thank you.
For the factor affecting the development of Islamic capital market in Malaysia, Hwa Kai and Jing Wen will discuss about this. First of all, to meet industry, a highly dedicated and qualified workforce is the key to ensuring long-term competitiveness and turning to the industry high performance and outstanding achievement. Islamic capital market requires Sharia understanding and market insight, competencies, and skills. Every financial transaction, product, and service must be approved and evaluated by these professionals who are proficient in the Quran and abide by Islamic principles. The Capital Market Regulator Forum carried out a research and found out that 82% of the countries which responded experienced lack of talent in Islamic financial service areas such as Sharia and Takaful. Besides that, another 60% of Islamic capital market professionals require further training and skills development. The scarcity of talent in Islamic capital market raises a major impact on the industry as it will affect the growth of Islamic capital market. Next, the lack of knowledge on Islamic capital market is the main reason of low penetration rate of the Islamic capital market. For example, a study conducted by Bursa Malaysia in 2009 shows that the main obstacle to the development of Islamic stock market in Malaysia is the lack of awareness of potential investors. A study conducted by Aziz and Hassan on year 2009 shows that 70% of the respondents have heard about Islamic unit trust fund before, yet only 39.5% understand the concept of Islamic unit trust fund. Nonetheless, 12% of the respondents have never heard about Islamic unit trust fund, and 3.5% opinion that there is no difference between conventional and Islamic unit trust fund, while 81% agree on the dissimilarity. Hence, lack of knowledge on Islamic capital market products lead to lack of public awareness of Islamic capital market.
Good afternoon, Doctor. I'm Hwa Kai, and I will continue to present another two factors that are affecting the development of Islamic capital market in Malaysia. The third factor is lack of practical experience of scholars. In middle 1990s, Islamic finance then moved to a revival and recovery periods. Islamic Bank looked for operation guidance and parameter for scholars of Sharia. Most of scholars of the time in Sharia had little practical experience. In many cases, the source they refer to their own particular legal school of thoughts. Although there seems to have been a general understanding early in this process that the opinion and methodology of at least 4 major legal schools of Sunni Islam will have to be taken into considerations. The fourth factor that affecting the development of Islamic capital market is lack of qualified lawyer in Islamic finance. Some banks establish board of Sharia consisting of numbers of scholars of Sharia, often from different schools of Islamic law. Discourse and debate have developed, and the discussion forum has expanded. Importantly, Islamic jurisprudence had to deal with the resolution of practical problems, the concept of real markets and the money of individuals, and do so with efficiency and practically. There was a pressing need to expand the number of qualified lawyers, as well as educate all the lawyers in market reality, including circular regulates international market with regard to issues such as finance, banking, security issuance, investment activities, capital market activities, entity structures, and corporate governance. Thank you.
My name is Mohamad Akaashah and will present on the prospect of the Islamic capital market in Malaysia. As you know, Islamic capital market is a market where investment, financing activities, and products are structured in accordance with Sharia principles. It is supposed to perform all the useful functions of conventional capital markets with justice and equitable distribution of benefits. Islamic capital market has proved an alternative source of fundraising and investment since 1996 by the establishment of the Sharia Advisory Council. The size of Malaysia's Islamic capital market has tripled from year 2000 to 2010 with a rapid growth of 16.3% annually. There are 15 financial institutions serving as the ambassador of Bursa Malaysia Islamic platform to date. In July 2019, it is recorded that the total Islamic capital market trades in Bursa Malaysia approximately 1.302 trillion ringgit Malaysia. Moving on, the prospect of Islamic capital market in Malaysia can see in regional perspective. The Securities Commission has reported an increasing number of Sukuk issuance in year 2019 compared to year 2017 from 168 billion to 199 billion ringgit. According to Moody's report, green Sukuk issuance is set to accelerate in Malaysia and can be growth to Indonesia as government in both countries are seek to promote sustainable policy. It has reported that the Security Commission's early initiative in setting up a dedicated Islamic capital market department within its strategy and development business group was to provide any infrastructure support. Thus, this agenda will attract domestic and foreign investors into low carbon and climate resilient infrastructure project as Malaysia was able to issue the world's first green sukuk in July 2017. It is expected that Malaysia's Islamic capital market will grow at an average rate of 10.6% annually in year 2020.
Assalamualaikum warahmatullahi ta'ala wabarakatuh. Doctor, my name is Mohamad Syazwan Shah, and today I'll be explaining about the global leadership as well as the multi-currency sukuk. So in the prospects of global leadership, it has been pointed that the Malaysian Islamic finance industry has a broad market component extensively ranging from the Islamic banking, Islamic money market, Islamic capital market, as well as takaful. The rating agency Malaysia has announced that the Malaysian was the top sukuk issuer with 13.0 billion ringgit, equivalent of 35.1% of the USD 39.5 billion ringgit equivalent. Since the adaptations of the sustainable and responsible Investment SRI Sukuk framework in 2014, Malaysia has demonstrated an enabling environment to stimulate the Islamic capital market. Green bonds and social impact bonds that have been introduced are to facilitate and promote sustainable and responsible investing. Therefore, the introductions of Sri Sukuk framework was part of the SC development agenda to facilitate the creations of a conducive ecosystem for SRI investors and issuers. However, to adhere a better value propositions as a center of Islamic finance and sustainable investment, Malaysia needs to be a leading positions of the global sukuk market. Therefore, to sustain the growth of the economic sector, the central market players in the Islamic finance context is important to improve the depth and the breadth of our debt capital market. On the other hand, Malaysia has also been trying to attract global corporate players to raise funds in Malaysia via the establishment of a multi-currency sukuk program which facilitates issuance in ringgit and foreign currency. Few questions has been imposed, such as whether the multi-currency sukuk program can be accepted by the foreign issuer and taking into account the foreign exchange exposure of hedging, whether the market is ready for the new product to be implemented, and has our industry take into account the ICBU undertaken by our industry players in building Islamic finance banking business in international currencies. Consequently, some of these points needs to be taken into considerations before promoting our country into the global hub for the Islamic capital market. At the end of the day, the opinion that the market should not be contented with what has already been achieved, as we should endeavor the strive to complete the journey of full circle, making the differences where it matters the most. Thank you.